Do you ever sell a stock too early and watch it trade much higher without you? You can't believe how much more money you should have made on the trade. Well, in this video, learn how two traders overcame their tendency to sell too early in a killer trade. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, two firm traders break down in step-by-step detail a trade they made in Snap and share what gave them the confidence to hold. Let's get to work on sharing these important trading lessons so you can grow your trading account.
Igor and I are doing this playbook on Snapchat. This is their earnings on the 21st of October, and this is what we're calling an all-time high earnings beat. And so this is kind of an overlay of the trade itself. We are going to be going into each one of these kind of bullets a lot more in detail over the course of the presentation. But we are splitting it up into the variables of the name itself, the variables of the trade, and then our reasons to sell. So the variables of the stock is, this is a triple earnings beat. It had several upgrades in the morning. It is a relatively stronger stock to the overall market, and it is breaking out into an all-time high. We are sort of very specific on are these last four, which is the gap up holds the upper 25% of the after hours move. The pre-market volume is elevated and is holding the after-hours range or the gap up. And much more specifically, which is kind of the nuanced part of this trade, is that this gap up is approximately 2 times its implied move, and the gap up is equal to 7 times its ATR. So it gapped up 7 ATRs.
When you say it's a triple earnings beat, what do you mean by that?
Within an earnings, we are looking for revenue, sales, and EPS. And when we speak about a triple earnings beat, we are speaking about all three of those categories coming out over the expected numbers, and that to us is equals to a triple earnings beat. And by how much it beats is a bit different, but generally beating all three of those estimates is really important.
Thank you.
And so the variables of the trade is there are well-defined pre-market levels. We are opening at the upper end of its range, above or below certain pre-market levels, but we prefer the name to be opening above its after-hours levels. And so with this trade itself, if there is a morning pull-in on the open, it fails to trade underneath the pre-market level. It was about half an ATR. That should be 0.05. And it then begins to build a pre-market range. This allows us to kind of have moments of risk control rather than not if there is a range that is built. Price quickly gets back into the range after a pull-in. It begins to make higher lows inside of this range. And note, this is about 15-20 minutes into the open of a really large gap up. And then price breaks out of that opening range. It holds the opening range, and the breakout is on elevated volume. And our reasons to sell is short-term changes in price, which is if the price gets back inside of the opening range when it breaks out, and we will kind of speak on that later. And if price fails to hold key areas for us, which is about 2 to 3 ATRs. And 3 to 4 ATRs, based around the stats that we'll go over, is going to be the overall target for this trade. So those would be the reasons to sell.
Yeah, so one thing we realized, Joe and I, with these, ER plays that are gapping up at all-time high or 52-week highs, is it's not very easy to, pick a correct target level and, hold a decent size until then. And what we found is, sometimes we might be taking off too much size too quick, looking for 50, 60 cents when we know that this stock, or hindsight-wise, it goes and moves, 3 or 4 points. So we were trying to figure out a way that we can have a better method of selecting targets, and with that, being able to hold a core or at least, decent position into those targets and, getting a much wider move. So to do that, what we did is we started tracking a lot of the previous earning plays based on their implied move. And with that, then collecting stats on like where the stock will move after the open and then kind of gauging that with ATRs, so then it's like it works across the board. So for example, with Snapchat, what we have is the average high after the open versus ATR. The stat that we had was 3.35. So, we'd look for at least 3 ATRs from the open to the high, and that corresponds to about 3.1 points on Snapchat. And then the average stat we had for the average low versus ATR was 0.57 ATRs. So, we can kind of use that, to look at getting in on a pull-in or whatever. And so what Snapchat actually ended up doing was 3.92 ATRs from the open, and then the ATR, the average low ATR, which it did, was 0.58. So you can see those kind of stats are quite closely correlated with what we were looking for, and with that, it just gives us a much more confidence in being able to hold a decent or majority position into those targets and capturing a much wider move.
Igor, can you tell me a little bit more specifically how are you using these stats, and from these stats, what you're expecting?
Yeah, for sure. So, we obviously like to plan it in the pre-market, we don't want to be coming into the trade unprepared. And, we see like maybe a momentum break, and with that thinking, maybe micromanaging, taking off half for 50 cents. When we know, ideally, using backtesting in those stats, we can expect this to at least hit 3 ATRs. And so with that, it just helps us get a much, wider move and being a lot more confident in the trade, and really helps reduce micromanaging, which is, can be quite troublesome for trading.
Okay, great.
Yeah, so here are the earnings. So revenue increased 52% to 679 million in quarter 3 compared to the prior year. And then EPS, which is one of the triple beat categories as well, was 1 cent positive versus an expected loss of 5 cents per share. Daily active users were 249 million in quarter 3 of 2020, increased to 39 million year over year. And the average number of snaps created every day grew 25% year over year. So those are kind of the kind of things we're looking for when we're looking for a triple beat.
Okay, of those, what's most important?
Well, for me, the most important is showing growth. So I think the daily active users for me is what I like to look for in stocks with earnings.
Yes. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So Snapchat itself engages in camera applications, and it uses camera and editing to have sort of online communication through stories, videos, and chats. And something to note is that Snapchat has been one of the beneficiaries of COVID, since users are more active on their cell phones, users are becoming more dependent on online communications with say work or going to school, and as well as recent bumps in the road for its competitor on TikTok. So that's not going to mention to us that we want to take this trade exponentially more. It's just kind of more of an interesting factor to sort of bake in.
Is this another thing we have to start using? Do we have to start doing Snapchat now, Kurt?
I don't think so.
I mean, we do YouTube, we do Twitter, we do Facebook. We got to do we do Instagram. There's another thing we have to do. All right. Sorry about that, guys.
And so the chart on the right is a chart of IGV, which is the internet sector, which Snapchat is a very big component in, and it is overlaid on top of the S&P, which is the purple line. And if you look at the arrows, those are from the drop before COVID. And if you notice on Snapchat's chart, this sector breaks that high only about a month or two after we came into those lows during COVID, and it's been trending since. And the S&P hasn't gotten over those highs to about double that time span. Yes, this is one of the beneficiaries, but also names inside of that sector are also benefiting as well, which explains the daily active user growth in their report.
Yeah, so here's just the big picture on the market. SPYs had already bounced from those lows. We'd seen already a few days a week of some SPYs and Qs. So here's just the, you can just see the relative strength in Snapchat recovered much quicker than the market names from COVID, and also this like little pullback we had recently. And obviously some of the main things we look for in this ER play is that it's breaking over into new all-time highs or 52-week highs. But then added with this is that it's also breaking over that IPO high, which is something it's a very good technical.
Can I jump in here and give you guys something to think about? How do you guys feel about trying to backtest using daily average users? How do you feel like inputting that into your backtest and see if you can get a little bit more edge using that?
I think that's a pretty interesting idea. We haven't really thought about that much.
And look, I think the bigger idea, the broader idea is when you have a news catalyst that shows the core of the business is growing, the core of the business is getting better, well, what do those results look like? And good for you to be looking at the statistics you're looking at. They may, in of themselves, get you to the same answer. But while you're at it, you might use an input of, hey, what happens if the daily average users really spike in this stock? What happens if they do so in stocks like this? So what happens if they do this in Twitter? What happened? And see if you can get some information there, and that may give you a completer picture of what this trade, what this day is going to look like. Something to think about. I'll let you guys worry about that.
This trade for us maybe comes 1 to 3 times in an earnings season, with all these variables aligning, especially with how much the move is compared to its implied move. So we really wanted to detail for this exact trade what we wanted to be exactly looking for, but more importantly, not trying to predict the price action, just be prepared and kind of avoid the sort of gun-shy aspect that can happen, and not come in with a bias for an invalid reason. And so here I kind of listed the stats that we already went over, levels which we would see into the next slide, which goes over the pre-market and after-hour levels, my ideal risk for this trade compared to my daily stop loss, and then what I'm looking for confirmation on this trade. Since it's a trade with such a large reaction, one might think that this might be overextended, and so that's why we put on the other variables that could make us think the other way, and maybe this name has more room. And with that, it can be very difficult to get in with confirmation, and so defining confirmation is extremely important. This will allow us to understand where price shouldn't get back over or under, and more specifically where we should put on the most amount of risk, right? Because we want to be avoiding trying to get the best price and not thinking about the trade idea, but more importantly, getting the best price, but also the best time, which would be the confirmation. And for this trade, it would be Snapchat doing 1 ATR within the first 15 minutes. If Snapchat gapped up 7 ATRs and say we think this might trend to 3 or 4 ATRs, if it's like starting to fail at 1 ATR, or maybe it's like an hour into the open and you haven't done 1 ATR, that's a sign to us that maybe this day might not happen. So judging how quickly and how efficiently that we get to 1 ATR and hold is really important. And we noted there are things that would not be getting us involved, which is what I mentioned, us being inside of a range for over an hour, so a much elongated period of time. Time spent under VWAP on the open if a red move happens, and a failed move to go to 2 ATRs and it's coming back into this opening range. And the reason being, with these exact earnings, this trade should be a very strong momentum trend. This should not be under its pre-market high in the first hour or 2 hours. It should be well over that high and trending with a lot of volume and a lot of momentum. We don't want to go into the day saying we think Snapchat is going to do this or this. So we picked up on 2 nuances. And so if you look on the left arrow, we actually broke a pre-market support about an hour and a half into the open. That was a change because usually with these earnings, we want them to be consistently holding its after and pre-market levels. And then we quickly got back over that area about 30 or 40 minutes later. And then about 20 minutes before the open, we actually got sold right back down. And the fact that Snapchat is having these sort of movements is just telling us that the open may be choppy. So maybe we want to be a little bit inactive on the open and just sort of observe prices and really wait for the confirmation and get a feel for the name better than just trying to buy the open and just hold it for the day.
Yeah, what that's telling me right there, Joseph, is that that's a super important level. So that's price action before the open that's tight, that's showing me that that level is really important. It doesn't trade below there once, twice, 3 times, almost 4, 5, 6, 7 times, gets below there, finally, can't really hold below there, gets back above there, and before, right before the open is still above that particular area where you're drawing your first arrow. So that to me is an inflection point, if I can use that word. That's I want to know if it's above or below that price when we open up.
And that's a really good point because as we kind of reference back, if there is a pull-in on the open, we don't want this to do, say, 1 or 2 ATRs on the pull-in and begin to break down certain pre-market levels. So ideally, if there is a pull-in on the open, we would like it to be extremely shallow. So exactly as you mentioned, if there is an inflection coming in right on the open, we're going to be observing that price a lot more, I guess, like stronger. And that is going to be a really big observation piece for us. And so on the open, the first move fails at the pre-market highs and immediately comes right back down underneath the opening price and has that pull-in on the open. And as you can see, this is a 2-minute chart. We immediately get back inside the opening price and try to make a new high. We come right back in, we fail again, and then at that point, what we're thinking is this is really big indecision. However, again, with such a big gap up, if we're only able to pull in about a half an ATR on the open on a 7 ATR gap, that to us is telling us that this name is really strong. And so it attempts to break down again, in which that move gets bid up almost immediately and gets right back to inside of that range. And that is now the opening range that we have prices to be risking off of. And now we are thinking like, all right, it's now coming into 15, 20 minutes into the open, and we would like to see a breakout within the next 5 or 10 minutes. Price breaks the opening range.
So when we get above the opening range, so what's the price that you have as the opening range? When you're and using that pre-market price discovery as well, you have this dotted right here. What's the price of the dotted line? The yellow dotted line, I think.
That is about 35.5.
35, okay, 35.5. So I'm calling that above the opening range, and I'm calling that above the opening range because I'm looking at the price action before the open. Are we using the same language?
Correct, yes.
Okay, what are we doing above there? Because I can't help but do one thing above there. I don't need to really think about anything else as an old school trader, as a person who was taught as a momentum trader, with a stock that crushed earnings, triple beat, as you guys said. There's not anything for me to think about now. I'm doing one thing.
You're buying.
I'm getting long.
That was the confirmation that we talked about in our pre-market plan. If there was an opening range that breaks out, only inside of the range, maybe 15 minutes, and it's breaking out. And the interesting thing is these orange lines are actually ATRs. So that orange line that corresponded to the pre-market high and the opening range high is 1 ATR on the open. So like I mentioned, if that breaks, not only are we breaking that opening range, but we're also doing 1 ATR extremely fast, right? And then the other ATRs are more gauges of strength for trend. So that's a really, really good point. As you can see, when it does break out, there's one little nuance that I noticed. And like I mentioned earlier, with this trade, this is a very strong momentum trend. So often than not, there's not many opportunities to get long after it does break out, because chances are this won't pull back to VWAP if that opening range break is true. And if you notice, when it does get into that orange line and you see that red candle there, we attempt to break down and that immediately gets bidded up. And note, we're at 2 ATRs at this point. So if we reach 2 ATRs, try to get a pull maybe back into the pre-market highs and immediately gets bidded up, if that makes a new high and holds there, that to us is a sign that, all right, this is going to be one of those trades where it does not give a pullback and it's just going to trend and the momentum is going to be extremely strong there. And that's really important for us because one, it keeps us in the trade longer. It's information that, all right, this trade is working. And two, it's preventing us from getting overly big because with that, when you're buying such an accelerated trend without any strong pulls to manage risk, it can be very hard to add and manage risk. So we understand that. So now we're thinking, all right, we're probably not going to get a chance to add in this position, but let us continue to follow price and go into our targets for the day. You can see extremely strong gap up, about 2 implied moves. It holds the pre-market range, where it holds the after hours range, holds the pre-market range, develops an opening range, and then it begins to trend for the entire morning.
So this is the 35 break, and if people were watching Snap on the open, there were huge offers at 35. So what I actually did was, on that pull-in, and then it gets bought up quick, I'm thinking, okay, we're putting up higher lows, and we're getting over that, that pivot or important level that we just spoke about. I want to put on a feeler and maybe look at potentially adding for momentum lot over 35. So that's what I did, but actually what happened, unfortunately, if anyone sees that wick that already happened, I actually somehow got filled at the top there. It was less than half a second. So that kind of messed everything up. But you can see here on the actual 35 break, because I really don't understand what that first wick was. It was a misprint or something. It was just really clean, and we got some really strong momentum up into that same first wick's high. So just want to play it. So here we go. Bids are coming up strongly. Getting tight on the offer. Those offers are still there. And then once they start getting decrement, it quickly gets over. Bids are still rising pretty well. Not seeing any selling on the tape. Now seeing some big bids coming up.
Notice how quickly it got above 35? I mean, this is a stock that can do a lot of volume every 5 cents normally. Yep. And you would expect selling every 5 cents. And it very quickly skipped prices. That skipping of prices is a signal to you that this could be really strong going forward?
Yeah, for sure. And especially because recently, it's a lot of these breakouts over whole numbers don't work as well as maybe they used to last year. But then this one just worked straight away. It goes up 20, 30 cents, with no hesitation. This is that higher low, which, after we pulled back in. And so the fact that, so right now I didn't have any position because after I got filled at the top of that wick, I just have to, throw in the towel and get flat because my average is now not good. So you'll see here, we wicked down to, I think it was 34.65 or something. It doesn't spend any time there. Quickly gets back up over 34.70s, which were quite clear on the opening range pull, which unfortunately we couldn't see. And then that signal to me is, okay, now we're putting on a strong high low. If I wanted to get in with proper size and have a stop or low day, I would be risking about less than half an ATR. And just remembering my targets are 3 ATR, that's looking at 6 to 1 risk forward. And then if you combine that with the factors of that strong, momentum break and all the fundamental analysis, to me, that's just a great opportunity to get into the size, whether it's not majority or just a decent chunk, and then looking to add later. But that was my key for me to get in. And we'll see on our executions later how Joe and I took this trade. So yeah, and then it kind of just chilled around here. And then when it got back over 35, that was just super confirmation that this trade was now working. So now that we had that opening range set up, as Joe was mentioning, when we get over this area, look, you can already see all the offers, and that was, the opening range high. So if we can get that taken out, that could just, be even more confirmation that this is the start of the trend. You can play it. And so that I wasn't, because I already really got in with a comfortable size. I was not looking for pull-ins to add, but I for sure should have been looking to add some more in here. Getting that opening range high, this setup usually works super well, and having a good average. But yeah, so that you could see there, that just got taken out super quickly and didn't even hesitate to pull back.
Yeah, look, that's a long, that's a long, that's a long, that's a buy, that's a buy, that's a buy. That you push the button, you push the buy button. I am perfectly comfortable what happens after that. I want to be in trades where I am in a good risk-reward trade. This is setting up beautifully. You've got great earnings, you've got a good level, you've got another good level, you've got above the opening range, it's working well. The tape has given us some signals. We let our hands go, we get long, that's our job. Our job in this trade right now is to get long. It is not our job to worry about whether or not this trade works or not. It's our job to get long. It's our job to push the buy button. It's our job to make sure we're big enough and just see what happens. Can't control what's going to happen, but I can control getting into really good trades. I want to be in really good trades. This is one of those.
I break down my executions for feelers, interest size, and majority, and then my sales are driver's seat, pay myself, majority, and then overshoot sales. So on the open, when we sort of drop out and we can't trade underneath the print low, I grab a feeler, extremely tiny size, but I understand with this position that getting in early is really important because we might not have the chance to get in at these prices, and we might have to be paying up later on. So I'm kind of just setting myself up for this position if it does set up. And so when it's starting to pull back, and like we've seen on the tape, we are kind of breaking that kind of $35 level, and we're starting to see it very slowly drop the bids and get back into the 60 to 70 cent range where it got immediately bidded up off the open. When that started to happen, I began to piece in more and more and more. Still not majority of my size, but I understand this is something that I am interested in because it's very defined risk, and I'm not in majority of my position because the timing, this is kind of anticipating that something may happen, but I am controlling my risk at this point, and I'm not going to say, in hindsight, I should be in full size here because of X, which is just not true. And so when it breaks that opening range high, what I actually do is, instead of like having a stop order there to just get long, since Snapchat was a bit choppy on the open, I actually waited a few seconds for the breakout to tell me that the tape is clear, to tell me the spread is staying tight, and to tell me that this is a real breakout. Once I get the confirmation, I hit in full size at that point. The goal here for us was to be able to hold majority into that 3 ATR target range, and not to go in hindsight and say, oh, I should have held here because of X. Like, we have a reason. And so as it's moving its way into 2 ATRs, I'm kind of trimming a little bit, still extremely small, but I do understand that this did just do 2 ATRs, so I want to be trimming a tiny bit. The sale I want to speak about here is if you look at where it says PM and then the right line where I sold on a down tick. The reason why I did this was we came into 2 ATRs and we're kind of failing here. You can see we're kind of here for maybe 20 or so minutes, and we're not trending as aggressively, and we broke over 37, got immediately pushed back down, and it started to develop a range. I don't want to micromanage, but I do understand the reasons to sell. I sold about 15% of my position there because that was a short-term change in tape. So what I did was I put a stop order for 15% of my position underneath that consolidation there, because I thought the timing was that, all right, I'm selling this because there is a change and this may continue. And if it does, and I'm consistently seeing a change, I want to be taking off more and more and more. But I also understand this is a shorter time frame reason to sell, right? And then we get the thrust back into 38, and that's where I begin to sell about 70, 80% of my position.
Yeah, so with my trade, I talked about getting that feel in the beginning and trying to add in that 35 break, but you can just see I got absolutely top ticked, And because of that, just have to get out straight away. My average is now not the best. I just can't afford to let this go against me.
When you get a really bad fill like that, what do you do?
Well, I would think, if it ruins your average, the best thing to do would be to get out.
Just get out right away. Yeah. And don't think about whether or not it's going to ruin your average price. Just get out. That's not the right price.
So I think that's what I did. I think as soon as I realized, I was out within 2 seconds. And thankfully, I managed to get out my average price. But even if it was, even if I took a small loss of that, I wouldn't be too phased. It's just something that happens, and there's not really much I can do about it. But then, once we put in that wick that got bought up at, high 3460s, as I mentioned before, I kind of gauged that as now I have, properly defined risk. And since I'm not like that comfortable yet in adding on pullbacks, I much prefer to get majority size straight away, or most of my size. And so that's kind of what I did. And then, after that, just took some risk off, to put myself in the driver's seat, and then just kind of like setting out targets with trying to hold majority into those ATR, targets like 37.5 to 38. And so that's kind of what I did. And then just left on a little bit and took that off into 38.5, just because, that could have gone a while, quite a bit more. And then at this point, though, I'm not, considering the variables, this could set up very well for a swing trade. But at this point, I'm not looking at it like that. I want to take this as an intraday trade, looking for the trend, and then maybe later reevaluate the situation, see if we maybe get like a bigger pullback, maybe to VOP or into the 37s, and maybe put on some size there for a swing trade, risking, maybe a third or a fourth of my realized profits.
So this is kind of the realizations that we made during this trade. And so one, like I mentioned, getting in is very important. But it goes much deeper, as we mentioned, with anticipatory size and confirmation size. Next is we were actually trading with a trader at the firm at this time, and he brought this point up that finding spots to add with confirmation on this trade is not easy. And that's why it's extremely important that we could define that with the variables that we have in the database of setups that we have for this exact scenario. And we can have that confirmation already kind of wired in our brain, so we can be a lot less reactive for this trade. And then the third idea is that the stats do not lie. It is important for us to listen to them. We were just kind of sick of going back to the end of the day and saying, man, I sold too early, or I sold too soon, or I held a 10% of size for the bigger move. And what we realized was we were saying that because we didn't know any better. We were just reacting to the result of the trade. And so we wanted to actually have a reason to say, all right, I want to be holding to this area because of X. I have stats to prove this. And this is going to allow me to hold majority of my position with confidence here and not go back to those old habits. These setups come maybe 1 to 3 times every earnings season. So we want to be as prepared as possible and really deepen this niche to execute. And like Bella mentioned, these stats are surrounded by the reaction, which is really important. But also I think Bella brought up a good point about the fundamental part for the earnings that I think we could definitely bring some of that into these as well.
Yeah, really comprehensive job, really good comprehensive job here, really good job here. Love the way you use stats. Love the setup you're in. You're trading a strong stock, probably the strongest stock on the day. You're getting in there. Very well constructed trade. Excellent, excellent work here. Very impressive work.
Thank you for your feedback.
Yeah, really, really good work here, guys. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.